Sid Rajeev, and I'm the head of research at Fundamental Research. We are one of the largest issuer-paid/independent research houses in the world. We've been around for 18 years, have covered over 575 companies across a wide range of sectors. Our picks or recommendations have historically ranked us high in multiple third-party analyst rankings. I encourage you to check out our platform, researchfrc.com, or we have a YouTube channel as well, Fundamental Research, to check out our ideas, recommendations, stock picks. So let's jump right into our report shown on the screen. I'm just going to share my screen with you in a second. I hope you can see. We published this report last week, and the report is about battery and critical minerals. The EV, electric vehicle revolution, has impacted the supply chain of multiple commodities. In this report, we decided to review a few underfollowed commodities related to EVs. We looked at rare earth elements, or REEs, fluorspar, and niobium. Now, EVs are expected to be the biggest long-term demand driver for all three commodities. We are projecting a large supply deficit for REEs and fluorspar. They're being used in EVs actively right now. In the case of niobium, the demand is currently driven by steel, but niobium batteries are under development, and if commercialized, they will push the niobium market to a significant supply deficit as well. So let's take a look at some of the key highlights in this report. I'm just going to move to my next page. Here's a quick outline on EVs. EV sales are expected to double this year to 6.4 million vehicles globally. The number one reason for the traction for EVs is declining battery costs. As you can see here, battery costs are down more than 50%, 60% over the last decade. And we believe that EVs or battery cars will be comparable to conventional cars or vehicles by 2024. So that's the general premise of the entire report. EV, the exponential sales growth, expected sales growth in EVs, and how it impacts the demand side of these three sectors we're going to talk about. Let's start with rare earth elements, REEs. This group has 17 elements. They are quite abundant in supply, but then their actual production is very limited because they are rarely found in concentrations viable for economic extraction. Most of production currently comes from China. China accounts for over 90% of REE's production. This table here shows the wide range of applications that REEs can be used for, but the biggest demand driver are permanent magnets, which account for about 40% over the overall demand for REEs. And we found that an average electric vehicle uses about 10 kilograms of REEs. So the general consensus for our EV sales is to increase from 6 million vehicles this year to about 30 million vehicles by the end of this decade. So if you use that 30 million vehicles, apply 10 kilograms of REEs, we came up with a significant increase in demand and a corresponding significant increase in supply deficit going forward. This chart here shows our demand supply forecast. You can see here the orange lines, which are in demand, the blue are supply. You can see a massive supply deficit expected for REEs, especially the ones that are used for permanent magnets. And these four metals are the primary ones used in permanent magnets. These are higher priced, heavier, and prices of these have gone up significantly in the last 18 months, primarily due to three reasons. Number one, supply disruptions in China. Number two is the US-China trade war, and rising demand for magnets, especially in EVs. So this is our general thesis for REEs. Moving on to fluorspar. This is fluorspar is an industrial mineral. It's composed of calcium and fluorine. Most of it is currently located in Mexico, but China again dominates production of fluorspar. It accounts for about 57% of global production, followed by Mexico, which is at about 16%. So China is by far the #1 producer for fluorspar. Like REEs, fluorspar is also used for several applications. And the biggest demand driver, we think, for fluorspar, like REEs, will be also EVs. About 1 kilogram of fluorspar is used in each electric vehicle battery. And if you apply my previous thought process thesis of 30 million vehicles by the end of the decade times 1 kilogram of fluorspar, you're seeing a demand growth going from the current about 10,000 tons. And we are expecting more than 150% increase in fluorspar demand versus the supply growth. We have been basing it using, we have assumed that it'll grow at historical growth rates. So for more production to come in to meet demand, prices have to go up from the current levels. Now, another interesting part with fluorspar is in batteries, fluorspar is used along with lithium as the electrolyte. Now, electrolyte is the medium that connects the anode and the cathode, the positive and the negative of a battery. And there is a new type of battery that are in development called fluoride ion batteries, or FIBs, which can potentially replace lithium using fluoride. They are under development and they are far from commercialization. But preliminary tests on these batteries have shown that they offer 10x more density than lithium-ion batteries, the current lithium-ion batteries. So if successful, if commercialized, we're going to see an increase in demand for fluorspar or usage of fluorspar in EVs. And that would change the demand supply forecast we have here, which is currently just based on the existing use of fluorspar in EVs. Moving on to niobium. Niobium has a lot of interesting features, and that has made it useful for superalloys. And so its primary demand driver is steel. So niobium's demand is directly correlated to the health of an economy. It's also a strategic metal categorized by the US due to its applications in aerospace and defense. Unlike the other two, niobium is dominated by Brazil. More than 90% of production comes from Brazil, and most of its product is coming from a single company called CBMM. I talked about the uses. It's used in alloys, so steel is the biggest demand driver. But like fluorspar, niobium also has strong connections to EVs. Toshiba is developing their own batteries, which uses niobium as an anode. Currently, most used anode are nickel and cobalt. So Toshiba's battery has titanium and niobium as anode. Again, like the FIBs, this battery is in development stage, far from commercialization, but preliminary results have shown that they can lead to faster charging times, longer range, improved safety, number of benefits over the existing batteries. Currently, niobium is used in EVs, but very small amounts, 200 grams per battery versus 10 kilograms of REEs and 1 kilogram of fluorspar. But if the battery that's being used, niobium batteries are commercialized, the demand side would significantly increase. Our current projections are purely based on the existing demand for niobium, which is steel, and some from EVs. That scenario shows a small deficit in the longer term, but this scenario could change significantly if and when the niobium batteries are commercialized. All prices of all these three commodities have increased in the last 18 months. I showed REEs before. Fluorspar prices also have been going up. Niobium prices have been going up, but it's more relatively stable, especially because most of the supply is coming from one single producer. So they are in a position to kind of control where prices should be. or at least in the near term. So that's our thesis on all these commodities. But the main underlying thesis or underlying opportunity here for all these commodities is that supply is dominated by one country. So REEs and fluorspar supply is coming from China, and niobium is coming from Brazil. So there is a strong need and requirement, especially for North American players, to look out or seek high quality projects in these sectors that would reduce our dependence on China and Brazil for these commodities. So that's it from me, but happy to take any questions.
Well, thank you, Sid. Nice presentation as usual. From here, we'll move on to the 4 corporate presentations led by James Walker. And take it away there, James.
Right, am I on? Give you the mouse, but okay. I think everybody can see that. All right, is that shared?
Yeah.
Okay. You can just click on the
mouse. It's really sketchy.
Yeah, if you want to just use it.
Okay. Is that the presentation? Yeah. Okay. All right. I think everyone knows me from the Fluorspar project we've got down in Utah, and thank you, Sid, for talking so much about it. We do have a fully permitted fluorspar mine, and we've even bought and paid for a plant that's constructed at the moment. We're just dealing with an international shipping crisis while we're getting it delivered, but you know that'll work itself out, and we'll get that plant to site. And that once that arrives, we'll be ready to start producing. Sid mentioned very quickly, just talking about fluorspar still, that most of it is coming out of China, and obviously once we get our mine going in Utah, we'll be the only producer in the United States where a lot of the lithium-ion batteries are produced. And so obviously with the trade wars and all those sort of items, you know, we'll be very well positioned to take advantage of being able to directly supply to US manufacturers while being in-house, the only in-house producer in the country. But because I've talked so much about fluorspar and ZIM2 presentations in the past, and I'm sure you're all fed up with me talking about them, I thought I'd also just remind everyone that we do have some lithium assets as well. So we've just to diversify the company a little bit. And so I thought I'd talk a little bit about those today, because the intention will be to spin these out into a separate company. So if you have Aries stock or ZIM2 stock, you'll get stock in this new company that we're planning for these lithium assets. While Aries will remain principally a fluorspar producer, fluorspar producing company. So just to talk a little bit about the property that we've got, it's just outside Las Vegas. So obviously it's very well connected. It's got good infrastructure already there. It's got good service roads going all the way up from about 30 kilometers outside of Vegas. And it's just next to a power station, so there's power. The reason why we bought this, and we own this out 100%, is that the USGS did some drilling on this site, and they found average grades from an entire drill program of 175 ppm, with high grades coming in at 550 ppm. So we went after the project at that point, and we looked at where the USGS had done some of their work, and we thought we'd do some geophysics just to start mapping out what was there. And so we started off doing some gravitational surveying, and that was where we got the anomalies on the left, and that showed a closed basin. A closed basin, what we can legally say is highly enriched. We're not allowed to legally say it's highly enriched with lithium, even though we've got the drill results from USGS. But obviously, lithium being the metal, it's almost certainly still there from when the USGS drilled it, and the gravitational survey showed us where the anomaly was. On the right is where we did the electromagnetic, or the CSAMT survey. And this mapped out a closed basin. So it can't be diluted. There's no influx of water coming in from anywhere else that could divert this out of there, and it's been contained there. And this red area, this is where we expect to find very high density lithium. And this is in brine form too. So unlike a conventional pegmatite or a conventional mining operation, it could essentially be a drill and pump to the surface operation. And the advantages of this is that we can pump this to the surface, not have to do a huge mining operation. And and Tesla's Gigafactory is just down the road from this. It's also in Nevada. So this is probably going to be, we can ride the back of the lithium boom and the renewable energy boom and just create this separate spin-out company. And then a drill program, a very basic drill program, just to hit the high concentrated areas in this closed basin. And we actually, with just a couple of drill holes, we can produce a resource estimate incredibly quickly. Yeah, we actually, because this will be consistent all the way through, because it's all liquid going all the way through, then the interpolation for the resource estimates and the PEA would actually be very, very simple. We can accelerate this very, very quickly. We did also, based on the USGS, buy a second property in Arizona, which was much, much larger. They also had done some drilling, but more importantly, they had actually done some aerial survey and some aerial magnetic surveys, and they found this whole area was essentially 22 square miles of lithium with a high concentration really appearing on this salar. As you can see, this very large salar there, it's essentially about 20 kilometers of distance with its high concentration in the middle. This would also be incredibly simple to develop. It would just be a matter of drilling, assaying, and it would obviously, being a brine, it would be very consistent throughout the entire property there as well. And so that's in the it's also very analogous to the famous Clayton Valley, which I think you've probably seen in the news recently. Is people like Millennial Lithium have been selling their property to Ganfeng for $30 million or whatever. And yeah, these are very good assets, and that's why we swept them up. So obviously, we'll keep Ares Strategic Mining as a fluorspar producer, but if you've got stock in the company, then once we spin these out, then we'll get stock in that as well. So, and that's it on the lithium.
Yeah, if you have any questions, feel free to put them in the chat or just raise your hand. I think we do have one here. Do you own Wilcox Playa?
The Wilcox Playa. Yeah, well, actually, it's being held by a guy. Well, we 100% own Jackpot Lake, the first property we talked about there. Wilcox Playa is being held by an intermediary for us, who's a geologist, because we have to register an Arizona corporation before we can transfer it from him over to us. And so we're building that Arizona corporation so we can register it. But Jackpot Lake, we own that 100%. Wilcox Playa has to sit with our holder until we got the Arizona corporation set up, and then we can transfer over.
Okay, great. I'll give a moment for any other questions. Otherwise, Chris with Commerce Resources, you'll be up next. You can take it away.
Thank you, Colton. Hello, everyone. Good to be here today. I'm going to start sharing screens here, and I'm very happy to talk about niobium today. For those who know Commerce or know Zim2, you will know that Commerce Resources is the first company that Zim2 created, and Commerce Resources was originally created around our set of claims in the Blue River area in British Columbia, where we now have the Blue River Tantalum Niobium project with a significant resource of tantalum and niobium, and I'm going to focus on niobium today. In terms of the Toshiba CBMM titanium niobium battery, if you went to Toshiba's website, you would see this photograph of this SCIB battery. And in terms of some of the text you would find there, to quote from them, Toshiba have been focusing their attention on the possibility of niobium titanium oxide, NTO, as a next generation anode material that will help increase the battery capacity while maintaining the excellent characteristics of lithium titanium oxide, the conventional anode material of SCIB. Niobium titanium oxide has roughly 3 times higher theoretical volume capacity density than LTO, while providing the advantages of LTO, such as long life and rapid charging. Moving along, Toshiba have successfully increased the crystallinity of NTO particles and increased diffusibility of lithium ions by taking advantage of its unique electrode technologies accumulated through SCIB development. Toshiba is aiming to increase the energy density by 1.5 times more than the existing SCIB without compromising its long life and rapid charging performance. The most important thing here is that the use of niobium titanium oxide reduces the size and increases the capacity of batteries, making it possible to extend the traveling distance of electric vehicles. In terms of this battery, when Toshiba first announced it, there was the comment that this battery could be fully charged in less than 6 minutes, which is really quite amazing. In terms of a slide from the Toshiba website, you can see this graph of the 3 times increased capacity of the NTO over the LTO. And finally, on their partnership with the world's largest niobium producer, Companhia Brasileira de Metalurgia e Mineração. And yes, I benefit from having an associate here in the office, Gabriel Moreno, who is Brazilian, who speaks Portuguese, and who can read news releases from CBMM in Portuguese and then translate it for us. So in terms of this research and development agreement, CBMM has an ongoing partnership with Toshiba to develop the battery with niobium oxide to significantly reduce the charging time of batteries currently used in electric vehicles. Their expectation is that they will start production of this between 2022 and 2023. In terms of a quote, which was essentially mind-blowing at the time, Ricardo Lima, the vice president of CBMM, told Reuters in February of this year that he hopes to sell some 45,000 tons of niobium oxide per annum by 2030, increasing from just 100 tons of niobium oxide per year, targeting this increased demand coming from electric vehicles if this ends up being the dominant battery design. Very, very exciting. In terms of the 3 amigos, the 3 companies actually working on this, it's actually Toshiba, CBMM, and Sojitz providing additional financial support. And here are representatives from all 3 companies. In terms of our Blue River project, this is an advanced asset that we have been working on since 1999, since Mike Hodge hand-staked this property in 1999, just after he finished high school, and we have developed it significantly since that time. The most important thing I think here is that we have a defined resource of just over 54 million tons in total, indicated and inferred, and I can break that down later, which includes essentially just over 190 million pounds of niobium in the resource. AMEC did complete a positive preliminary economic assessment and released this in November of 2011. This is a project history timeline, which you can certainly go over at a later date. These are some photographs of the actual upper fur carbonatite, which is the asset that is the deposit that is most advanced on the Blue River property. You can see the town of or you can see the view from the upper fur carbonatite down through the valley, down to around Blue River. And all of the essential infrastructure is in place on our Blue River claims. The PEA completed by AMEC in 2011 used arguably an overly large production scenario of 7,500 tons underground per day. We are looking at doing a project update that reduces that down to potentially somewhere around 2,500 tons per day. And we are certainly of the mind that this will be also economically positive. We'll keep you posted on that. In terms of the resource, as I said previously, the indicated resource is 48 million tons and the inferred resource is 5.4 million tons, which then totals just over 190 million pounds of niobium in that resource. We also had some metallurgical improvements over the PEA base case, and these were very positive results achieved with our work with Michel Robert, who set up the process flow sheet for the world's second largest niobium producer, which is Niobec in Quebec, which takes up about 9% of global niobium production. Finally, I just wanted to show this slide since in so many corporate presentations recently, people have been talking a lot about ESG. And in terms of Commerce Resources, we have always believed that this is something that we need to address at the earliest opportunity. And we started reaching out to the Simk First Nations in 2005, 2006. And 5 years later or so, here is a slim, trim, and slightly younger David Hodge, who was president of Commerce Resources at that time, signing an MOU with the then chief of the Simk First Nations, Keith Matthews. We're very proud of this agreement. We're very proud to keep on contact with the Simk First Nations in the hope of developing this asset further. That's all my time today. Thank you very much.
All right, thanks a lot, Chris. Again, if you have any questions, feel free to put it in the chat or send them, just put your hand up and we can unmute you. Otherwise, next up would be Steve Minot from Eagle Bay. Eagle Bay is still a private company, but he can tell you all about it.
Before you start, Steve, maybe I could just sort of explain that one of the things that ZIM2 does is create new companies, new junior exploration companies, and that's exactly what Steve is doing. He's currently raising money to get the required number of shareholders to go public. He's backed by ZIM2, and we have been negotiating to purchase ground, purchase properties at a very strategic time, in that many property owners are ready to give up, and we're there to give them their final offer. Anyway, go ahead, Steve.
Fantastic. Good morning, afternoon, evening, everyone. Thanks for attending. Thanks, Dave, Colton. Thank you to ZIM2. Steve Minot, Director of Eagle Bay Resources. Just going to screen share here. One moment. Everyone can see that okay? Perfect. All right. As Dave touched on, yes, Eagle Bay Resources is a private company at the moment, in the midst of raising of finances. Please, if you want further information on that, contact me afterwards. I'm more than happy to speak to you about it, where we're at, where we're going. As you'll see, some familiar faces on our team, been around for quite some time now. And I'd just like to touch on here with the rare earth elements, put this page together with, as well as niobium. You know, as China has came forward and said they are not going to be giving any more of their resources out, we couldn't be at a better time right now with Eagle Bay. And I've extensively over the past month been in conversations with large companies, some out of Japan, some over Europe, and really starting to see that shift as they're starting to look for further and more resources, and BC being one of the main places they're looking for. As Dave touched on as well, the properties that we have been speaking about and looking to acquire is going to be very beneficial for Eagle Bay to not just be short-term, very long-term, and exploration discovery. I know a lot of companies, you know, we like to hear drill work program and so forth, but the key thing here to remember with Eagle Bay Resource, and as these companies are looking for different resources, the conversations I'm having is they're looking just to exploration and discovery so they can find more resources. So the more property that you have, the better position that you're going to be in. And that's exactly what we've been doing with Eagle Bay at the same time raising this finance. So to touch in, I mean, I'm sure everyone that's attended here, you're following the rare earth elements, you're seeing the shift and seeing where it is starting to go. So things are starting to take off, and I mean, Eagle Bay couldn't be in a better position and more excited to be where they are at the moment. Moving to the property location, we're 85 kilometers northeast of Prince George. The great thing about this, it can be accessible year round. And my senior geologist, as we speak back and forth, he is very excited. He spent numerous amount of time up on the property, knows what's around there. And again, I keep saying it, but I can't say enough. It's a very exciting time to be in this market, and one of the lowest investments around for a rare earth element and niobium company. And again, as I touched on to start off, anyone wants any further information, please contact myself, Steve Minot. I'm more than happy to answer any questions, available at any time. So thanks for listening, and back to you, Colton. If anyone has any questions, I'm happy to answer.
Okay, great. Thanks, Steve. I'm just going to pull up the chat here. We do have a question here. So from John Rice, in relation to this battery metals event, Zim2 has several public companies that are going to benefit and be successful, might he add, from the demand of REE and niobium. For Eagle Bay, a private company as of today, where does Eagle Bay fit in the best in the battery metals market? So where do you fit in the battery metals market?
Great question. Thanks, John. Thanks, Colton. As I've touched on prior with Eagle Bay, I understand we're private, surrounded by public companies at the moment, but you know, I'll go into how I've explained it where you know, there's everyone looks at Amazon, and that's a great example. And if you could have Amazon, I'm sure we would want that. But I mean, what, it's going to cost you $3,000 for one share? But the way to look at it, as I like to see, you know, think outside of the box, look at supporting products, and, you know, look to Amazon and their shipping company, look at the boxes. Without those boxes, Amazon doesn't go. They're not shipping. And, you know, it's the same thing with Eagle Bay here. We are a supporting product to an electrical vehicle market where those big companies that I know I am speaking with, they need the rare earth elements, and we're going to be that supporting product in the demand of this market as it takes off. And I'm at a lower investment. So look outside of the box. And this is exactly where these companies, not just Eagle Bay, but the guys that are presenting here, the ones in Zim2, we are supporting product to the big companies that are going to go. And these big companies are going to put the money into these companies to ensure that they keep themselves around, because they are investing a lot of money themselves into the electric vehicles. And it's a great time for them to find a low investment, which is where Eagle Bay fits in perfectly to the battery metals market right now.
Perfect, great. All right, so next up will be Saville Resources, and I'm just going to get the presentation up here. Okay, so they can see that now.
Thank you, Colton. My name is Mike Hodge. I'm the CEO of Saville Resources. Sid and Chris have gone over quite a few of the things that I was about to go over. But niobium is a key ingredient for a number of strategic things. I believe Sid missed some of the niobium applications for electric vehicles being in the steel production, which is where most of niobium comes onto the market these days. And then as for the batteries, there's sort of 5 things that the lithium ion battery needs improvement on, and niobium is the key to solving a lot of those. So like both of them touched on, it is going to increase the input and output of the battery. So it's going to be shorter charge times and more output once you get that charge. The stability of charging cycles, it'll increase the number of charging cycles you can have. Again, a big problem with lithium ion batteries is not being able to recycle them properly. And then with the anode being made out of niobium, it prevents the explosion problem because it won't allow lithium to form a metal on the anode. Therefore, it can't short circuit itself. Just a few quick points on niobium. This is just going over, it's that battery, the SIEB battery that Chris was talking about, and its charging times in a graph. This was that article that CBMM came out with, and it's a graph going over what 100 tons to 450,000 tons would look like on a graph over this short period of time. What I would like to talk about is the drill program that Saville just undertook. We had drilling done in Mallard area, which is where we are chasing the results from 2019, where we had each hole we drilled got better results. We drilled 3 more holes down in Mallard for a little over 600 meters. It was 680, I believe. And the core is looking consistent with what we had in the 2019 drill program. These are just numbers that you can have a look at from our 2019 drill program. This is core from our 2019 drill program, and it's the red arrows are pointing out the pyrochlores, which is where the niobium and tantalum is found. And this is a cross-section showing that drill program left it open in all directions. So at depth, north, east, south, and west. We then drilled in Marana, which is an untested target. We put 4 holes into Marana. The first couple were on this eastern side of this mag high. And then we put one up in the north and one centrally. The core that we have pulled out visually looks the same as the samples that are in this boulder train. So Glacier would have come pushing up this way and taken material from this mag high, and that's where you're getting all these boulders. It being the same type of carbonatite, so being a magnetite calcite carbonatite with similar pyrochlores, similar colored pyrochlores, excites myself and our technical team tremendously because they're boulders ranging from 2 to 6, and then one that's a little off this map that got up to 16% niobium. This would be a game changer in the niobium world. CBMM, although private, their production is around 2%. The only comparable in Quebec is their average grade is 0.6% niobium. With Saville being at trading around 4 cents, it is a great opportunity, especially because we are hopefully going to have a very exciting discovery very soon. That's it for me.
Okay, great. And it looks like we got a couple questions in while that happens. So let me just take a look. I don't know if these are specifically for Saville, but we have one from Rupert. Looping back to fluorspar, the graph shown suggests that the global deficit in production versus demand by 2030 will be greater than the entire global production as of today. Is that correct? So Sid, that's probably good for you.
Sorry, I missed that question. So
I'll say it again if you'd like. So the graph shown for fluorspar suggests that the global deficit in production versus the demand by 2030 will be greater than the entire global production is today. Is that correct?
Yes, that's right. So let me just pull up that report again. I can show you the details for everyone else. Just 1 second. So we are expecting the production, the expected demand that in 2030, we're expecting a shortfall for about 20% of total demand for that year. And there is, just to keep in mind, so this is based on the supply forecasts are purely based on the existing known resources and the prices. So prices have to go up from current levels to incentivize developers to advance undeveloped resources.
Okay, great. So there's a couple other questions, two for Saville, so we'll just start with those. So the first one is, when does Saville expect to be in production? And the second one is, what are the next steps for Saville in relation to Commerce's efforts?
Well, for production, we're a little ways away. We need to start with getting a resource and then go from there. So putting a timeline on that is going to be next to impossible. I wouldn't mind a little more clarification on what do you mean, John, by in relationship to Commerce. If it was just with what Saville's next steps are, we would be analyzing the core and then making a decision from there. Because if we get extremely high grades on Marana, the focus would be changing over to the Marana target. We wouldn't be completely leaving Mallard aside, because with the geophys that we have done on the project, it's our belief that there's a sill running from Mallard and slightly below where we've been drilling up to Jay Lake, which is significantly farther north than where Marana is, and would link up a few other targets like Moria, Spoke, and a few other targets.
Okay, great. And looks like we do have one. John says, thanks. So for Commerce, so Chris, Robert's asking, if the PFS shows positive results, how do you plan to fund additional resource definition and potentially project development at Ashram without causing significant shareholder dilution given the expected large CapEx?
Thank you very much for the question, and I'm happy to answer that. We had an engagement with Deloitte and their metals and mining group, which is a division of Deloitte we didn't know existed until they actually reached out to us in 2011. And we engaged them a year later in early 2012, just before we released the PEA on the Ashram. Essentially, their job was M&A, to introduce Commerce Resources to companies that would potentially partner with Commerce on a project level investment. And there are a few examples of the kinds of deals that we would find very attractive, such as historically the deal between Mitsubishi and Copper Mountain, and say, for example, the deal between POSCO and Fortune Minerals. And these are both essentially non-dilutive investments of significant capital by the industry major into the resource junior to advance the project to the completion, through the completion of the bankable feasibility study and the application for a mining permit. So let me just say that the deal between Copper Mountain and Mitsubishi happened in the fall of 2011, as around the same time that the deal happened between POSCO and Fortune Minerals. And somewhere around that time, the venture exchange was trading at 2,500 points, where it's trading at 900 today. So what we have just gone through is arguably one of the worst decades in mineral exploration history. And so our expectation is to ideally finance all of the outstanding requirements of the most demanding mining legislation on planet Earth, which is the Canadian 43-101, through a project level investment. And to break that down, essentially, this would be capital straight across the board in exchange for a percentage of future offtake or for a percentage of the actual asset. And how those things get valued is very interesting. For an example, when Fortune Minerals had a market cap of $400 million, they took in $183 million from POSCO for 20% of one of their two assets. So the valuation on that one asset was essentially $1 billion, while the market cap of the company was 400. Now, it's those kind of independent valuations of the projects that we are certainly interested in talking about to industry partners. In terms of what I would say is the importance of the slide in any of our presentations about the approximately 30 requests of sample material from Commerce Resources, and this includes samples of tantalum, niobium, rare earth elements, and fluorspar, dominated by requests of sample for rare earth elements for sure. But the bottom line is that these companies that have made these requests would all be essentially viable partners for us. So in terms of our goal, it is to finance the company through the outstanding development steps through a project level partnership.
Okay, great. So that's all we've got for questions and presentations.
Just, if you don't mind, I want to just add a quick comment. We had a question before the call. Colton mentioned about the recent developments in Afghanistan. How is it affecting the supply? So Afghanistan is supposed to be rich in copper and rare earth elements. They're not producing anything significant right now, so it's not impacting the near-term supply chain of any of the mainstream metals. But that said, there have been the USGS, U.S. Geological Survey, has not assigned any particular reserves for copper or earth in Afghanistan, but they have identified multiple targets that is of interest. And we've been seeing China moving in and trying to kind of see if they can get a piece of the thing. So Afghanistan is an area of interest. It doesn't have any near-term impact on production, supply chain. But longer term, it is an area of that be under the radar.